please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, I tell you one thing, the real test of Chandra would be this year because, last 1 year, jury is out because Tata Steel, for example, you could argue it's up 41%. GSW Steel is up 65% in the same period and has 10,000 crore more market cap than Tata Steel. And the process of deleveraging had already started. Tata Motors, for all the talk that, they've fixed the domestic business, the fact is that it's about, and it's about CV cycle. Ashok Leyland has far outperformed Tata Motors. So that's also not something that, you want to sing about. Perhaps Titan and Tata Global are two companies, but on Titan you could argue that it's been Bhaskar Bhatt's baby for some time now. So I think the jury is out. It's let's see, next 1 year I think could be crucial. But
I think
these numbers are conceding more than they're revealing right now.
It is just more. It's just more of taking some tough decisions. NTT Docomo. Cutting the losses on telecom, even if it meant selling it for ₹1. It is those tough decisions that had to be taken and have been taken. And of course, the tenure of a chairman of such a large group, such a diverse group, can never be made in a year.
Yeah.
It is obviously a long-term innings. It's a marathon that we have to judge and not a 200-meter sprint at all. So, of course, we will get to a lot of veterans on this issue. But now we have another veteran from the IIFL conference.
And in fact, it's interesting because joining us now from the sidelines of the IIFL India conference is their keynote speaker and noted economist Jim Walker. And from his note, he says that for the first time in a decade, they are overweight on Chinese equities. So, let's find out more. Jim, good morning. It's always a pleasure speaking with you. We're speaking after a while. So, thank you for joining us on CNBC TV18. My first question to you is this. Given that India has seen quite a bit of pressure lately and you're overweight on China for the first time in a decade, can we read this as, perhaps a lot of money could move out of India and into China in the near term?
No, I don't think a lot of foreign money is going to move out of India and go to China. I think the foreign money is here for a reason, and it's a very solid reason. That's that the demographics of India are excellent and the prospects of economic growth are fantastic over the next 5 to 10 years. So it's not really a question of choosing India over China, except in the sense of a relative maybe market move over a 12-month period. Now, very few of the long-term fund managers are going to sell down their Indian stocks to take advantage of perhaps a slight outperformance in China over the next 12 months. But there's a lot of money still sitting in the sidelines in the developed countries that could be put to work in emerging markets. Okay. And in that basis, China is actually one of the relatively attractive emerging markets just now.
Okay. Jim, good morning. Your thoughts on the recent developments in India, and in particular this big PNB fraud. Do you think that this has the potential to sort of derate the India story?
Derate it. I think probably not so much derate it, but it exemplifies the problem in the banking system and really just brings it back to light again. This is one of the things that we've been trying to say to our clients for the last 2 years and trying to get over in our research, that there really has to be a concerted effort to recapitalise the Indian banking system. On the basis of our measures, real lending rates in India are far, far too high. They're way above the level that we are comfortable with in terms of promoting an investment cycle and an economic growth cycle. And the main reason that they're high is not because of RBI official rates, but because the banking system has not been able to transmit interest rate cuts into lending rate cuts. And the reason for that, of course, is the bad debts in the system and the oversupply of banks. There's just too many banks. There needs to be consolidation and recapitalisation, and the government really needs to bite the bullet on this one.
Okay. Well, we're also showing you live pictures of the UP Investor Summit. That's the Prime Minister coming to the summit to inaugurate it. Jim, good morning and thank you very much. It's a really long time since we spoke to you. I wanted your overall view on Indian markets. There has been an underperformance of Indian equities this year vis-a-vis other EMs. There has been a minor underperformance of the rupee as well. Is this just mean reversion after a great performance last year, or is there a worry about Indian macros now that's lately developing?
No, I think you've hit the nail on the head. India has been such a tremendous performer, not just last year, but really since 2013. There's probably a bit of indigestion out there in the sense that the market valuations have run ahead. The corporate earnings results have just been okay. The profit cycle hasn't turned up in the way that it really should at this stage in the economic cycle, and that's probably giving people a bit of pause for thought. We in our strategy report at the end of the year, for the first time since 2013, downgraded India from overweight to neutral, purely on a cyclical basis for 2018. So the underperformance, I think, was predictable, but as much because the outperformance has just been phenomenal for the last few years.
You know, one of the macros that's slightly turned worrisome is the trade deficit. It used to run a year ago at less than $10 billion a month. It then rose to about $13 billion a month, and the last count has been $16–17 billion a month. Is that a spot of bother? Is that why the rupee is worrying?
No, somebody asked me that question at the IIFL forum this morning. And my answer to that is that if you look at the way that investment is coming into India, foreign investment, that's where you're starting to get some deterioration in the trade and the current account position. Because those foreign investors bring in capital equipment, they bring in a lot more in the way of imports. But if you actually look at the adjusted position of the current account balance plus direct investment flows, India's current, what we call adjusted resource gap, is actually improving, which means that through time the rupee is going to be well supported. I'm very happy to be long the rupee. It's one of our best bets in terms of income for the Asian region this year.
Okay, well, we have many more questions for you, Jim, but we have to take a mandatory break, so do stay with us. We'll come back in just a few moments from now.
We have been speaking with Jim Walker from the IIFL conference, and we are getting to him in just a few seconds. The markets at this point in time, the bottom is not falling off. That's the important point. The mid-cap is still in the red, but it's kind of seen a little bit of buying at lows, and so have the Sensex and the Nifty actually mildly in the green, but the point is definitely off lows. Okay, Jim Walker, founder Asianomics, has rejoined us from the IIFL conference. Jim, how do Indian valuations stack up now? Do you think, you spoke about indigestion with people having had enough of India. At this point in time, do you think, therefore, a goodish bit of selling has to happen before you advise people to buy here? Or do you think you're finding value?
No, I don't really mean indigestion in the sense that people have got to get out of India at all. I certainly wouldn't recommend any of our clients who are long-term portfolio managers, possibly pension fund managers, to be selling in any Indian stocks at all unless it was something that they didn't like anymore. They should really be buying steadily over time. But there's no doubt that the valuations in India have become a bit richer than in many other emerging markets, at a point where the earnings cycle doesn't look that buoyant. And that's a time that I think people can take a chance of putting money to work in other markets, at least for a short time, until the valuations in India become a bit more attractive again, and then they should be restart their buying.
Okay, by the way, just take a look at some of these IT names. They're surging at the moment. So Tech Mahindra has moved to the high point. It's more than a 3% gain over there. And mid-cap IT is just on a tear this morning, whether it's NIT Tech, Mindtree, all these stocks are up and about. Jim, I wanted your thoughts on how the global markets could pan out from here, because last year was exceptionally good, but the start to this year has not been so good. How are you dealing with the macros and the micros in the global markets now?
Yeah, I mean, there's a lot of confusion at the moment, but the one thing that hasn't changed is that there is a synchronised global recovery going on. It's strong growth, or not strong, but good growth in the US, good growth in Europe, good growth in Japan, which is an amazing one. All of that feeding back into emerging markets as well. China moving forward rather nicely. there's plenty of growth going on, and with that there will be plenty of corporate profitability and plenty of earnings upsides over the course of 2018. And in our view, given the way that we look at profit cycles and then investment cycles, we think 2019 and 2020 as well. So we're very happy to be buying mostly emerging markets on the dips here. I do think the US has a much bigger valuation indigestion problem than India does. And that's where the real problems lie. And I certainly would not be advocating people should be overweight the United States. I think that's got a lot of downside. But I think once people get over the usual knee-jerk reaction that, oh, the US has fallen today, we need to fall as well. When they look at what's happening with economic growth and profitability, there's plenty of very good opportunities out there, and emerging markets hold the best ones.
Okay, Jim, how big is crude going to be a factor for India? How big is that a risk? Because, you know, last year we had a lot of windfall gains because of excise. This year is a big election year as well, and crude prices are obviously way off the highs. So that big excise benefit is probably out of the window now. So your thoughts on that?
Yeah, I mean, we're actually quite positive on commodities generally, which includes oil, but not from the perspective of this is a cycle that's going to run away from us, and that it looked, or as it did in 2005, 2006, or again 2010, 2011. We're in a much more moderate growth cycle in this respect. I think oil prices and industrial metal prices are well underpinned, but I don't think we're going to see them drive much higher than they are just now. So I'm pretty relaxed. I hear what you're saying, the windfall benefits have gone. Government needs to come up with different ideas. But I don't think I would be getting too exercised about oil prices just now.
Okay, finally, Jim, leave us with a word on how you see the US dollar. The dollar index has moved up from that 88 level. US yields, and whether those markets will now start feeling the pinch of the cost of money.
No, I don't think that, you know, emerging markets in particular have had much higher interest rates than the developed world now for the last 7 years. There's one or two exceptions, like Hong Kong and Singapore, that follow the global trends, but our interest rates in emerging markets have been plenty high enough. I don't think that the rise in US dollar interest rates means very much to us. Okay, if we're continuing to borrow in US dollars and that was the only game in town, then there might be an impact at the margin, but that's all we're really talking about here. I think we're in a system where interest rates won't go an awful lot higher from here.
Okay.
There will still be money around in the global economy, but mostly domestic.
Okay, Jim, thanks a lot for joining us and giving us your thoughts. And we hope to speak to you soon once again. That's the word coming in from noted economist Jim Walker, how they prefer China. China looks relatively attractive, but of course, India is still on their buy list. We'll take a break on that note. We'll return with the latest commodity trades with Manisha Gupta. Stay with us.
We can take a look at the commodity prices now, where we have seen more red than green. And starting with the crude oil prices, that definitely is off its 2-week highs. We have slipped more than 1% in the global markets, and that's exactly what the Indian markets are mirroring. We haven't been able to hold above that 4,000 per barrel mark for the Indian prices here. Even as you have seen the OPEC commitments continue, the statements from there are quite positive. It really is about the global supplies and the US output that continues to weigh on. And now, especially that, after that, you also have the speculative long positions continue to unwind, and that really seems to be putting pressure on that prices. The gold and silver as well has continued to decline. The strength in US dollar, the US Treasury yield surging up is putting pressure here. We saw a biggest one-day decline in 2 years come in for gold yesterday. That one declined by nearly 2%, and we are looking at 0.25% to 0.5% of a decline coming in for both those metals on your screens. The base metal prices also have seen some decline going forward. The demand is something that it's a bit of a question mark. Of course, the long-term fundamental is still positive because most of these metals are in deficit globally, and we are looking at the LME and the Shanghai inventories declining as well. Much of the volumes, of course, would come back after the Chinese participation is back tomorrow. The only metal to keep an eye, of course, is aluminum, as I have been saying for last couple of days now, because that is where the inventories have declined quite sharply. With the import tariffs being discussed in the US markets, that is one area that could actually see some buying on the lower sides today.
Okay, thanks a lot for that. something's wrong with currency market. Of course, there's a global dollar strength as well that's playing out, but on the rupee now almost approaching 65 is what we have, and PSU banks have now started to make lows of the day, so just keep an eye on that pocket as well. That's the wrap on Bazaar, of course. Lots of trading ideas lined up on Chartbusters.